All right, my beautiful friends, here we go again, together at last, you and I surrounded in little puffs of loveliness. Let's go over what's happening here in this market today, Wednesday, October 31st, 2018. Well, if you were to turn on any of the COD networks, especially CNBC, you're going to see some very, very happy people there with big smiles on their face, almost in like a hyper, I don't know, some kind of orgasmic state. Okay, let's put it that way. This is what they always do whenever the market does what it's doing, which is rallying. The stocks are higher across the board. The Dow Jones Industrial Average is up about 250 points. I want to talk about that. I also want to talk about a little danger that might be lying in the path of this market here, despite this rally. So, this really should not be a surprise to you if you follow this blog. I've been explaining to you that these gyrations that we've been seeing in the market over the past month pretty much are nothing. This is normal. People are just not used to it anymore. But again, nothing to see here, and that's the truth. I'm not trying to make a joke. And I've been explaining to you since Friday that this market has been trying to bottom out, trying to find direction. So yesterday and at least so far today, stocks are again in rally mode. Most of you know how I've been playing this. This sell-off this month, I've taken full advantage of that, and you can see what I'm talking about. Go to my website, traderschoice.net, left side of the page, all of my credit spreads. As stocks were selling off, I was selling puts onto the market because I knew this wasn't going to last. And how? By looking at the bond market. This is how you make it work. I want to talk about the bond market a little bit. So, number one, stocks have been trying to find a bottom, trying to find direction, as I have been explaining to you again since at least last Friday. Now, there are a couple of other factors here as to why stocks are higher and why they more than likely will continue higher. I'm not saying that we're not going to have volatility. Of course we are. I also explained this to you Sunday when I did my Markets a Look Ahead segment. I said I expected to see volatility, but I also said I expected stocks to find a bottom here. But let's talk about a couple of other things that are going on. We got, I don't want to say bad economic news today, but kind of bad economic news, and this is putting a boost under the stock market. I'll talk about that too. So the Chicago PMI, the Purchasing Manufacturing Index, came in lower than expected. It came in at 58 point something. They're expecting a reading of 60. To be fair, a reading above 50 is good, but it did miss the mark here. So is our economy slowing? It might be, but as I've been explaining to you, the Fed is not going to stop. This easy money is going to continue to pour into this market. So we get, again, not bad economic news, but not as good as we would have expected or was expected. So the market is rallying off of that. Bad economic news is good for the stock market. That means the Fed has got to take a second look at this and will, again, keep easy money flowing into this market. So that's another factor weighing into why stocks are higher. There's another factor, China. China is talking about economic stimulus over there. So again, look, remember this. We live in a global economy now. America is not an island among itself. All right, that's what they want you to think, but that's not the truth. So if China's going to do some kind of stimulus over there, well, guess what? That's good for the stock market too, here in the United States. So this is not that hard to put together. Now, what I want to talk about, why we need to be maybe a little bit leery about this, is the 10-year yield. The 10-year yield is climbing right now along with the dollar. Stocks are higher here again for the reasons I explained to you. But if this continues, if we see that 10-year yield continue to spike here, especially with a stronger dollar, this is going to raise a yellow flag or a caution flag in front of our lovely faces. You understand? But for now, we're taking advantage of this. We are always watching that bond market. We are always watching the dollar. This is why I have these set up for you on my website, right side of the page. Bond market, dollar. I'm really trying to make this easy for you. Seriously, and take advantage of all this. All the stuff I have on my website for you. It's 100% free. Link in the description of this video. All right. So I think I put a real perspective on what's going on here, why stocks are rallying, at least so far today, why I believe they're more than likely going to continue to rally here unless we get some spike here in interest rates. 10-year yield decides it's going to, continue higher along with the stronger dollar. That's very stock market negative. But for now, I mean, just go look over at the COD. They're like this. I mean, they're loving this. All right, my lovely friends, I will see you and all of you at my post-market wrap-up. Bye-bye.